Hi, I'm Mal from the Money Study, bringing you another episode in You and Your Superannuation, up to episode number 5, and this one's all about spouse contributions, perhaps where your partner or you can contribute to your partner superannuation fund and get a tax offset for doing so. Before we go into the details, there's my disclaimer, all about facts and figures, information only, it is not advice. Now, spouse contributions. You may be eligible for a tax offset. Now, an offset is literally reducing your own taxes here for a contribution that you make on behalf of your spouse. So you're effectively putting some money into your partner's superannuation fund, and when you do it, the government then gives you a tax offset, reducing your overall taxes. There's obviously, with all these things, eligibility. There's quite a bit of eligibility criteria we've got to go through here. Their income has got to be less than $40,000 in the income in the year in which the contribution was made. And that income includes all of their assessable income, their fringe benefits, and of course any salary sacrifice and that sort of stuff is included as well. So if their income is under $40,000, then yes, you contribute to their super fund. Yes, there is an offset to be applied. Your spouse didn't exceed the non-concessional contributions cap, so they didn't put in more than the $110,000 or the bring forward rule in their year, so they weren't in trouble themselves. Your spouse also had a super balance under the $1.9 million cap. Again, it's sort of a situation where they've got that sort of money. The government decides that the couple doesn't need any more help. So, yep, if they've got to be underneath that $1.9 million general transfer cap for the partner to be eligible for the offset. Your spouse has to be under 75 years of age when the contributions were made. The general eligibility is that the money's got to go into a genuine super fund and complying. And of course that can include self-managed super funds, so long as it's all registered and so forth. Both you and your spouse must be Australian residents when the contribution is made. You can't claim a tax deduction on it, so it's not going to be a concessional contribution for you, because you're going to get an offset. You can't get an offset and get a tax deduction for making the contribution. And you and your spouse must not be living separately or apart on a permanent basis. So basically you're living together as a couple under those normal rules of what a couple is all about. Now, what do you actually get? The offset amount, it reduces depending on the income. So where the spouse's income is greater than 37, yes, there's a slide, it phases out. So once your spouse's income is at 40,000, there is no offset applicable. Under 37,000, you basically get the full benefit of the offset, and anywhere in between, it's just basically a sliding scale. So the tax offset is calculated as 18% of either the lesser of the $3,000, so a $3,000 contribution, minus the amount by which the spouse's income exceeds the 37. So effectively, if they are earning less than $37,000, it's 18% of the $3,000. Or obviously the size of the spouse contribution if it's less than $3,000. But on a $3,000 contribution, if the spouse was earning less than 37, then yep, you would get an 18% offset. Now, 18% of $3,000 is $540, and offsets are not a tax deduction, they're an offset, which means it literally does subtract off your tax bill. So if you had a tax bill of $20,000, your tax bill would drop immediately by $540 for doing so. So, yeah, not a huge amount of money, dare I say, but for a $3,000 contribution, $540 is still, what are we talking, nearly 20% or so, that you're getting effectively on that money. So still, it's worthwhile doing if you can afford to do so, and it makes sense based on your partner's situation and your tax levels and so forth. The tax offset for eligible spouse contributions can't be claimed for super contribution that you made to your own fund and then split them. We'll be talking about spouse splitting contributions in the next episode here. but you can't literally put it into your fund, roll it over into your partner and claim that as a spouse contribution. No, that's actually a rollover. Totally different thing. This is just a spouse contribution. Generally speaking, to make a spouse contribution, you would contact the super fund, and they would normally give you a BPay number with a different BPay number where it's classified as a spouse contribution, or other super funds will possibly just ask you to fill out a form to earmark this contribution as indeed a spouse contribution. So a bit of paperwork involved in that regard, but not a big deal, and it certainly can be beneficial if I can reduce my taxes by $540 by helping my partner out. Then with the extra $3,000 into their super, it's a bit of a win-win all the way around. Need help to understand it all? Give us a call and make an appointment to come and have a chat. We'll talk again hopefully on a future session.